Good
Good
morning.
morning, everybody.
Hi guys, gals, everybody.
Good morning.
It's
Morning.
Hey, Bill,
Friday.
you're dressed up today.
Morning.
Well,
Morning.
there's Margaret. She's raised up in the chair.
I went riding at 6 a.m. I feel a little better.
Nice.
Wow.
Yeah, we're gonna hop in the boat once I'm done here. But
It's dreadful here.
Where are
like
you?
like hot.
Oh, the humidity was 100% at 6 a.m. and it's in the 90s every day. It's terrible, terrible.
You're up in Ohio somewhere, right? Cleveland or somewhere?
Cincinnati.
Oh,
Yep,
Cincinnati.
Cincinnati.
Yeah. Yeah, I mean that
Sounds like,
humidity's hitting kind of it's hot and humid here, but you know, it's we're on a lake at least.
Yeah, water helped.
It certainly does, and so does beer.
Well, I'll
Yep,
take
I
it
didn't
to
say
the
that
nose,
out.
but
Okay, well, it's Friday. Let's get rolling. Hopefully everyone had a good week. Markets been doing well this week. We're going to be up again today, it looks like. We're S&P's looking for a record high, and Dow's up. We got 10-year up, oil's up, everything's up. Today we're going to expect the PC inflation report, and that's the Fed's favorite inflation report for whatever. I'm not even sure why we care, about what the Fed, that whether they raise or lower, because the markets are just they don't seem to care what's happening as far as interest rates. We still go up. If they do cut, it could even propel it higher. But what we would need is with interest rates, since they're short term, it would help out with government debt and the refinancing of all the loans. And I think wasn't it this quarter, Trent, where a lot of the loans had to be refinanced, or was it, we were talking about a
4.8.
trillion
I think it was like 4.8 trillion.
this month, yeah.
Yeah. And I think by year's end, it's like 5 point or 9 point like 8 or something like that. Some
Right.
magical number.
So that from a government point of view and our debt, it's not good to keep the interest rates up. And I think that's the argument you're seeing going back and forth. And you're starting to see some Fed presidents talk about, lowering it as early as next month. As far as mortgage rates go and things, and that goes more off the 10-year. It really doesn't have an effect on too much on what the Fed does. Credit cards don't seem to be tied into anything because they're all at 27%. They don't really care what any bond rate is, it seems like. So anyway, Middle East is still calm, amazingly. So that is good. Uh, Yesterday, the GDP came out. It contracted by 0.5%. Corporate profit report came out. Corporate profits declined in the first quarter. Jobless claims came out, fell more than expected. Um, and so we move on. Today's Friday, like I said. You have weekend risk if you're trading, so keep that in mind. Stories can come up on the weekend, and go either way. Your stocks could go up, stocks go down. So keep that in mind today. If you're thinking you got a good profit, you may want to take a little off. Certainly possible. Certainly nothing wrong with that. Let's go in and take a look at some charts. Here's the SPY, the S&P 500 Trust. You can see kind of sideways to moving up, and we're going to open up right under resistance, right on the upper Bollinger. We're starting to see, we were sideways, but we're starting to see the Bollinger kind of diverge, which is a good thing when you're going up. When you're going down, it's not such a good thing. We're above the 200. So if you were a Paul Tudor Jones investor type and got in when you got above the 200, we had a little scare here, didn't go under, and we're still up. And as far as a swing trade, if you wanted to swing trade the S&P, you're above the 9, you're above the 200, above the 50. Unfortunately, you're right on resistance. We'll see what happens. And, right above it's where we're going to open, and you have some sell orders above. So, the momentum's picking up. Oscillators are picking up a little bit. We're starting to see this kick up, and the reason is pretty apparent. We're seeing a lot of the tech stocks and the Mag 7s come back to life, and I'll show you those here in a second. Here's the Qs. You can see the Qs moving right along the upper Bollinger. We got above the 9 on a swing type situation. We're going to open a little higher. You got some sells right above that. But again, the oscillators are starting to turn, from going sideways to seeing some upward momentum. And that upward momentum, is due to, basically NVIDIA and Meta and Microsoft are going up. They are huge parts of these indices. And when they go up, they tend to swing the indices up also. You look at the Dow. Dow's even picked up over the 200. It's been fighting that 200, just going straight along. Now we're seeing the stochastic starting to move up. We have the MACD is finally positively crossed over. So again, we're riding the upper Bollinger Band. We're going to open just a little bit above. You've got some sell orders above that, and then of course resistance above that. So we're starting to see a little bit of a breakout on the upside on these indices, and it's due to the underlying companies within these industries. If you're in the gold, this is where everybody went. Basically, risk off. You go into gold now. It's the opposite. Still, gold is was hugging the 50. Looks like today we're going to open down by the Bollinger Band. So money will probably be flowing out, as you can see down here, from gold more into risk on, probably more into equities and technology for sure. Bitcoin. Bitcoin's come back up into the third zone of support and resistance. You have the 50, and the 50 has come up right next to the 20, right next to the 9 for support, right on the bottom. Again, right where natural support was. Started to see the Bollingers diverge a tad. We're seeing a little bit of a move on the MACD. Again, so this would have to get up above 112 new highs, to break out, and then go to 115 or 120 potentially on the upside. But, back within this third zone of support and resistance. Ever since we broke out of this zone, we played a lot in here, came back through. Now we're back up into the third zone. NVIDIA, here's where we're getting a lot of the gas in the market. You see, we were kind of sideways and, stepping. And then all of a sudden, with the news of, the Middle East and other news out there, we're starting to pop up above the Bollinger, 2 days above the Bollinger, going to open up right about where we closed. May a little higher, and you have support or resistance of sell order above the level. We don't have a resistance level on NVIDIA, and we're starting to see a little bit of a pop on the oscillators. So again, this, along with a couple others, are starting to push the major indices up. Meta is another one that's strongly helping. Okay, we see 3 days up above the 9, and then you've got going to open up right above Bollinger. But we do have some resistance right atop of Meta. So just be aware of that. But, good strong moves on these. Microsoft, for so long, these have been going kind of sideways, and we've been watching them every day. And now, Microsoft has just been a nice, steady run. I mean, if you got in like Paul Tudor Jones at the 200, you've done pretty well, and these are the type of stocks. These are the type of stocks that once they get above the 200, they can run a long time above the 200. Where you got some of the smaller stocks, maybe less market cap, they can bounce up and down. They might not run as well above the 200, but these guys will. So again, this was a good time if you were going to be a Paul Tudor Jones wannabe to get in, and it would have rewarded you pretty well on a lot of these stocks. Google, even Google has popped around. Google was fighting along sideways resistance here. Ran off, came back down, bounced off the 50, and here we are above the 200 again. Okay, well, we got a lot of resistance above Google, but it did come back up around the 200. So pretty good move for Google. Amazon again, kind of tailing up. We do have resistance and sell orders above Amazon, but we're above the 9 again, and we've been above the 200. If you got into this one, it popped up, and you got in, you're running about you're running a little higher, but you're above the 200. You tested it and stayed above it. Got a little pop down here on the stochastic, which usually means you're going to see that on the MACD. But again, we got some resistance right above it. Apple. And let's look at Apple. You know, Apple's just still kind of rolling sideways along the Bollinger Bands between um, basically support in the 50. Look at that, 4 days in a row, just kind of sideways. Not much going on with Apple at this point. And then Palantir. It'll come up. There we go. Palantir kind of looks a little bit like Microsoft, you know, just kind of between support and resistance. We've come up. We do have resistance. We have a little bit of a roll on the Bollinger. You can see they're more diverging than converging, or converging than diverging. Sorry, it's Friday, but had a nice run. You are up against a lot of resistance, sell orders, and natural resistance, and the upper Bollinger Band. And Tesla, of course, I kind of left that one out. Tesla's kind of, you know, they had that big event in Austin, and then we came back down to resistance, and then we played between resistance and support, ending at support. Then we closed below support, and it looks like we're going to open right about where we closed on Tesla. We'll move over to some of the momentums that we have left. Well, let me go to this one first. XLK technology, this technology ETF. Again, this is one on these ETFs. You were playing Paul Tudor, you got in, kind of came down close, but you're still in and you're doing well from where, you know, long-term investing using technicals. Got a golden crossover about to happen here, the 9 over the 200, and you have no intermediate resistance showing on the chart. You have some sell orders right above, and you're just running right along the top of that Bollinger Band. It'd be nice if you were going to get in, you know, you have diverging Bollingers to get a little bit of a better price in here. But other than that, you know, you're seeing good oscillators. Technologies is what's moving the market right now. Some momentums. Still looking at Robinhood. Came up with a little bit of resistance, hit. So you're in it. And if you believe in resistance, you may want to take a little off the table here. We'll see. Could pop up, you know, where the sell orders are a little bit higher. But technically, you see it go and you see it sideways. You know, it can either go sideways and pop, or it can roll back around. I usually wait for the 9 to come up and see what it does on Robinhood. And then this one's been on a tear. It really is had momentum, and it's Coinbase. Okay, since the stable coin legislation came out, you know, 1, 2, 3, 4, 5. Now we're 6. That is a lot of momentum up. It went right up to where we have sell orders. So, you know, it's a long time outside of a Bollinger Band. So again, I'd expect that to come in. The oscillators look good. So if you like momentum, you have a little adrenaline in you. This one was certainly a stock for you. If we look at the under the 200s that we've had on our list, Whirlpool, this has been on a while. You know, we put it on way back here. Still well within support and resistance. We still have upward going Bollinger Bands. We still have upward moving 9s and 20s. Had we got into this back at this point, you'd be up about $12.42 right now over this period of time on a nice long swing trade. ILMN, these are under the 200 stocks. This one's kind of, like we said, is slow and rising up to the right. We have some sell orders right above the Bollinger Band, but you know, we got in back at this point. If you were in this one, you're up about $3.84 since we put it on the list. BBWI, it's another one we've had for a while. Got in back at this point here. It's just, you know, the Bollingers were collapsing, and then all of a sudden, because of some momentum up, you're seeing the oscillators move up. You're seeing the converge or divergence on the Bollinger Bands. We're up about $3.49 on this particular swing. Ball. Again, these are under the 200. Ball came up, had a nice run up, and we've watched it on the 200. Came back tested it, and you know, diverging Bollingers. We've got oscillators that are moving up. This is a nice slow runner, and it got above the 200. Okay, so, and it retested. Those are usually good signs, you know, and it's not extremely going outside the Bollinger Band. We're just playing between support and resistance. So it may be something you want to consider, Paul. And we'll look at one more. MasterCard was one that kind of got hit by the stable coins, and it's come back under the 200 and really has popped up 3 days in a row above the upper Bollinger Band. Visa does not look the same. Visa went the other direction. But, you know, MasterCard, I don't like buying outside of that. but it does have some momentum. You might get a better price down lower, and then you can run it up, but you do have sellers and then the 200 above it. So just be careful.
Are you sure that's
Watch
MasterCard?
this. Oh, sorry, that's not MasterCard. That's Melise. Sorry, you're right. Crap, I put the wrong one up. There's MasterCard. Sorry, MasterCard did not come down. This is where the stable coin hit on the 200 and came back. But Melise looks pretty good anyway, if you guys want to look at that. What's the other one? Micron. This is on our watch list for just potential swing trades. Nice going on Micron, except 3 days in a row. Even after earnings, we popped up just a little bit above sell orders, but this resistance level came on. So, my trading plan, I would have gotten out, at resistance, and that would have resulted in $11.65 per share profit from here to here on Micron. EL, the other one was on the list. EL, we got in back at this level here. Still running, we came back within the Bollinger, and now we're following it back up. You got a good crossover over the 200, back test of the 200 here. You still have nice oscillators. You're moving up. We are up $3.84 as of close yesterday on EL from the time we put it on the list. SYF, Synchrony Financial, smaller little stock, but came up. Now we're above support. Basically, it's support and resistance, a nice run along the Bollinger. We're up about $3.49 on this one since we put it on the list last weekend. We've had Reddit on the list this week. A lot of talk on Reddit. Let me get it so it comes up. There we go. You see, Reddit had a nice run down. We were up at 224. And now Reddit's sitting at 143.95. It's come back with inside the Bollinger. Pull it back in closer. Got above the 200. Okay, so if you're an investor type, that may interest you. Ran up the Bollinger Band, came right back in. We're still on the Bollinger Band. Oscillators still look good on Reddit. Watch out for some sellers right above. Got the Bollinger Band, and then you got resistance, quite a ways up. So Reddit's been a good runner. I know you guys have been talking about it, been in it. That's good. Congratulations. It's up $4.80 since we put it on our list. AMD. I'm on AMD. AMD, this is another one we were watching at the 200. It came up, hit, got past, retested, put it on the list, and it's run up to resistance. Okay, this is where I would get out as a swing trader. If you're an investor, you might say, okay, I'm above the 200. I have good oscillators. This is a place I want to invest. We've had a lot of these, opportunities. If you're going to do the 200 as your investment line, we've had a lot of opportunities to get in, and they're all have been doing very well, from indexes to these individual stocks. So, that Paul Tudor Jones philosophy has shown up pretty well, in the last week or two on some.
Mark,
yeah.
What level is the IRL showing up on that screen? It's at 150.71 on mine.
Mine is at 144.18. Are you on intermediate, short term, or long? Let's see here.
Let me check and see.
Yeah, you're on long term. You're at 150.
Oh yeah, shoot, how'd that happen? Okay, thanks.
Yeah, that happens. Yeah, that happens, Margaret. I do the same thing. Like, that looks really weird. Then I have to go check it. But yeah, but this could go up. I mean, it's got momentum up on the. I'm just doing it because I swing trade and I follow my system, and everyone else has their system. Momentum. Momentum. People may say, I'm going to ride this up, and it's going to come up and hit sell order resistance level right here, and it just might do that. But for me, I follow my system, which is my system, and from there to there on AMD, that's $15.44 per share. So I'm pretty happy with that, as a swing trader. The last one we talked about last week, later in the week, JP Morgan. And I just like this one as a stock, and this one again. Had you done the Paul Tudor Jones, we had all these opportunities and popped in, you've done really well. I mean, you would have popped in, let's say, at $240.88 above the 200. and now you're at $288.75 with one trade above the 200 as one line on a, doesn't happen all the time, but a lot of times it does, and it works. Here we got, we're at 1, 2, 3, 4, 5, 6 on the outside. That's extreme. I expect that to pull back in. Again, no intermediate resistance on top, but we do have sell orders, so just be aware. But that was a nice run up. From where we put it on and talked about it last week, we're up $18.39. So we have a lot of good, on the swing trade and under 200s, a lot of good results this past week, just, in 5 days of trading. So that's what I got so far. Trent, take her away.
All right. We've really come to this conclusion that in your core portfolio, I'm not talking your trading portfolio, but your core holding portfolio, you don't really have to own a lot of companies anymore. And it's sort of being proven out with the S&P 500 hitting all-time highs yesterday. And what's interesting about that is only 5% of the S&P 500 was near all-time highs yesterday. Okay, only 5%. To give you an idea, the dynamic change we've seen over the years is back in 22, 13% of the S&P 500 names were typically at all-time highs alongside the overall index. That has shrunk to 7% now of stocks being at all-time highs in conjunction with the S&P. And as we probably have beaten the table on this for a long time, two companies represent 14% of the S&P 500's move yesterday, and that was NVIDIA. This is, to me, after being a financial advisor for 22 years, manage hundreds of millions of dollars, and the whole idea of diversification is like almost being thrown out the window. It's like you diversify to mediocrity. And there's also another side to this. If you concentrated your portfolio down to, say, 7 to 12 companies, a core portfolio, and your returns would be so much more exponentially higher than they would if you just bought the S&P 500 as your core holding. But there's a flip side to that, and that's that risk management element. Two companies represent 14% of the move yesterday in the SPX. Two could represent the demise of the S&P 500. Easily do that. Take that out to the other, 7, 10, 8 companies that basically represent the majority of the market cap. This is where I think having a risk management process in place is so key. Having an understanding what stop losses are, what trailing stops are, how to create a maintenance program around preserving your capital is so essential right now because there's so much potential for upside. I mean, I created the tell sheet 12, that's Kerry's 12 companies of his list of 60 some odd companies that met my qualitative analysis. Took 12. If you started with 20 on June 16th, you would be up roughly 9%. Okay. If we had that going at the beginning of the year, you're over 30% return. 12 companies in comparison to 500 in the S&P. And I think the key to this is preserving those gains and having a process. And it gets complicated to an extent, but I think it's so well worth it. And I think we're in an age where 401k so massive these days into markets, and that is what's the money that's coming into these markets. And then it's this machine driven, algorithm driven investing that is concentrating everything from when my grandparents invested from a broad market to now just a very 7% of the S&P represents the majority of the moves on a annual 3-year, 12-year base or a 5-year basis. So as you're building your portfolio, and this is, I really would emphasize this, you have a core portfolio. That stuff you're investing in. You have a risk management process around that. And then you have satellites. And maybe one of those satellites is a swing trading process. So more of a week long kind of look. And maybe you're just an adrenaline junkie and you have a daily section. But those, all three of those, like a stool, three legs on a stool, support each other. The key to it is having that process and that put in place. When I was a financial advisor, we never ran trailing stops. It was just you bought it and you held it, and that was what we were fed for many years. Looking at it today, trailing stops can save you so much money, and it doesn't have to be complicated. So that's sort of my rant today, my thing. And if we look at the S&P 500 here, the S&P 500, the op market is priced in a support level of 6,000 and a high end or a resistance level of 6,200. Okay, so that's, we're moving out of this consolidation range, and I have to give credit to Paul and his boxes.
Actually, we've been using boxes for a long time.
Yeah. There it is. Accumulation, breakout, move higher. This is something that we have to be more aware of as more long-term and short-term investors, is these accumulation phases. What is that institution doing? What is that hedge fund doing? What's that trader, that 26-year-old trader who's making $1 million and blowing half of it on meals and entertainment? What is he doing on a daily basis? How does he position himself? And I think this is just a prime example of how do you risk manage around that? How do you put in a risk management process for your long-term or intermediate term portfolio? So 6,200 is the top end. If we break through that over the next week or so, we could go higher. And at this point, I think the way the market is interpreting economic data, it's got to be really big to move this market down, in my opinion. And I think this market is pricing all that in this way. So, um, overall, I think we're optimistic, no longer neutrally optimistic, but now just optimistic. So, there we go. Let's open up to the floor. Questions, charts,
Looks like we got some
rebuttals, anything
requests.
like that.
Got some requests for some charts here, so let's take a look. Lulu, and check out the chat. You got some questions in there. You can answer when we're done here. Lulu, we looked at this before. Had a nice big old gap drop down. I came down. We're following support again. We're looking like United Health. Okay, we're following the support level. The nines come down. I want to watch this to get this above the 9 price action, and I also want to watch the oscillators. They're not quite there yet, and potentially we can see this pop back up. You do have sell orders at this level today, right above this level, and the resistance. But if we can get this to pop up, get the momentum back up in the oscillators, this will be a potential swing up under the 200. Just not right at this moment. And you know, United Health, we've been watching that, and the Bollingers continue to get as close as I've ever seen them. So again, we're waiting for United Health, but look how long United Health has just held this support level. Okay, and so Lulu looks like to be in the same class as that. And we have a bunch of these we're watching. Oops, not P, such as Pepsi. Pepsi's doing the same thing, you know, as United Health and as Lulu now. So we'll keep those watching for when they make the turn, and we'll make some decisions on whether it's a good time to potentially be in those or not. CLSK. It's another one that got on. So this is one that popped above the 200 You do have resistance at 1096, so it's a smaller price stock. And then you have sellers at 1164. You can see back here we've come up and we've hit resistance before. So just be aware of that. We'll look at the momentums down here. 62 oscillators look fairly decent, but you do have resistance right above you, and it's been one that we've touched before after going above the 200. So just be aware of that when you're considering CLSK. What's the other one we're looking at? ONDS. ONDS. ONDS got above the 9 2 days ago, hit resistance, closed right at the 9. Then it opened at the 9 yesterday and closed at resistance. Let's look at the volume down here. Volume's pretty good, above the 200. But again, we're sitting on this resistance level, trading at $1.75. So, you know, a really small price stock. Seeing a little bit of an uptick here on the stochastic, but the MACD is still below the signal line. So, you know, something that you'd want to trade. Not for me because of these resistance, and also because I'm seeing the Bollinger Band still converge on this particular stock. Silver, someone brought up about silver. Silver, you know, is going to be, you know, it's come up 3 days, got above the 9. You still have this resistance level right above it, 33.75. Silver is going to trade if the markets are going wild. You know, money will probably come out of the commodities such as the metals and move into the equities. That's normally what happens. But on the upside, you have a little bit of upside support at the 9. And then the last one, I didn't do this one. I need to do it. Berkshire came down, still within your, you know, you're investable. You're above the 200. You're still within kind of a swing trade because you still haven't had a full candle close because of that wick. We'll see if it gets back above the 9. We've done this before in the past, so we'll see if it follows the same pattern. But you're still okay, oscillator wise, and everything on Berkshire. Just the price action dumped down a little bit for you. Okay, Trent, did you get a chance to look at those questions?
Yeah. Hold on one second. Let me share my screen with you. Where is it? Come on. Okay. All right. So yesterday I did buy some AEH. It looks like I'm going to open up in the positive today, which is good. I do take into account we're at a bit of a resistance level with it. So right in this area where it's going to probably open up is resistance. But I like the setup here, this accumulation here for since going back to June, since basically the first of the month. And now we're seeing some move higher here. And if we can break through this resistance level, I think the next level is right at 1570 or so, where we're going to see some resistance as well, or just in this area here. But I think I like the relative strength side of it. So that's more of I like that. Iran is interesting because it's so tied to crypto. But I like it. I think it's in a potential resistance range. A lot of sellers in this area in the past resistant. And my belief is that if it breaks through 1424, there's a lot of clean air that it could run in. But I do think this big candle here, this big volume, is going to be a bit of a head fake. It's going to pull you back into the sort of this area of 1153, where this could become support on the past. And so I like it from the perspective of all my trade trend lines moving higher through the 200. The intermediate trade trend line needs to move through the 200 to give me enormous confidence that we're moving higher. But we're still below it by roughly $2. The intermediate trade trend line is below the 200 by $2. So I want to see that come up, but I do see potential accumulation here, pullback, accumulation here as these trends, the intermediate trend moves up. I think there's some potential going in the second half of this year. Power solutions, I like just how it just follows this trade trend line. I do believe, though, it's going to get into a resistance area. Depending on where it closes today, we may start seeing that, but I would not be surprised if it pulls back towards the trade trend line around, say, just let's average it out about 67 or so dollars into this area, 68 roughly. And this becomes a support area accumulation and a move higher. So those are the top ones. Overall, if just the general market flow of money is positive, a lot of these companies are going to float up with them as well. So those are really my key ones that I like. But overall, I like sort of the direction of the portfolio and where it's going. But like anything, unknown market events can change direction because these are high beta positions to get volatility. So when I look at it from an intermediate standpoint, I look at my 15 or my trade trend line, 15-day moving average. If I'm going to put my stop losses in, depending on where I got into a position, I'm going to run about a 7% trailing stop on these because that gives me room for them to fluctuate, and but also it keeps me in them as they rise higher and and I'm looking at it from beyond 62-day period of time. So take that into account. But those are really the handful that I think are going to take off. Credo to me is it just it's small accumulation periods and then a move higher. My question is, I think it's starting to run out of steam, but I do like it as a company. So a pullback towards the trade trend line would not be shock to me. It possibly a good entry point to start building a position. So there's really what I'm thinking there when it comes to that.
Thanks, Trent. Appreciate that.
Yeah. Yep.
A few more charts people are uh, putting up here. Let's take a look. SMCI, Super Micro, kind of been on a little rolls. Kind of nice, it's kind of been playing around the 9, got below it. Now we've had a little bit of a breakout. You've seen the oscillators breaking out too. I don't know what the news was or what happened, but it got above the 9, above the Bollinger Band, 2 days above Bollinger. That's quite the momentum. Some sell orders up here at 51.36. It's something you want to play. I try to get back inside the Bollinger and get a better price as it pops down a little bit. Sometimes that works, sometimes it doesn't. It just takes off on you, but it's looking more positive than it has been a couple of days ago. So something happened. It's part of the technology sector, so it's probably catching the rising tide of that. And but the chart looks much better, especially these Bollingers diverging. SOXL. Okay. This is the semiconductor 3 times, so it's extended out 3 times. So if the semiconductors go up 1x, this is going to go up 3x, and vice versa. If it goes down 1x, it'll go down 3x. So these are the type of investment instruments that are not considered long term. They're considered almost daily when you trade them. But it's come right up, along with technology, with NVIDIA especially, and it's right at the 200. Okay, so we'll see if it plays off the 200, gets off the 200, or you can get up to the sell orders, or comes back down to support at the 9. But again, these are designed for daily trades and not really long term. So just be advised. Make sure you check that out and do your due diligence on these 3x, 2x kind of stocks. And Paul, PALL. Okay, Palladium. First thing I want to do on something I don't know is come down and check. Volume, I'm looking right across volume. If you look right here, as I swing across, you can see volume is really, really low. We talked about volume. I wrote a little thing in my office last week on volume. You can go check it out. Palladium is, at least in this one, is really popped over resistance and shot up. Our volume went up to 644,000, where the day before was 180. So do you really want to chase this outside of a Bollinger Band? And even though the oscillators look good, uh, I would say just follow your trading plan and your risk strategy. This is outside of my risk uh, bailiwick. I wouldn't feel comfortable getting in at this point. Doesn't mean you shouldn't or you can't. It's just that it violates too many of my principles. But again, it had a nice pop, but the volume is pretty low on this one. Let's see what else do we got. I think that's it from what I see. Oops. I got some more messages here.
Mark,
Oh,
when
this
you look at like summertime markets, how do you view them? Like I've always been, when I first got into the business back in 2000, um, it was always sell in May, go away, come back in October and start over. And that was
yeah.
really prior to all the algorithmic trading that has now become the dominant player in all this. How do you interpret that today? Is it just all the seasons have all blended together and this is just a 24-hour casino?
I
Or is
see,
some of those old school principles still in place?
that's a good observation because, back in the olden days, and I mean that when you and I started out doing this stuff, uh,
I didn't have
it
gray
was
hair, by
more,
the way.
what's that? Well, I'm
I
older than
didn't have
you, so I
gray hair
even go
then.
back further. But it was, more traders you'd call your broker. Okay. When I first got into the industry and we were just starting with internet, it wasn't even internet yet. We still had brokers. You'd have to call a broker, and broker said, take your order. And then he would call down to the wirehouse, and the wirehouse would get somebody to run down to the post, and they would do the order, with all the guys that, like you saw with Dan Aykroyd and in that one movie where they were
Yeah.
down there. And anyway, there's all the papers all before.
Trading
And
spaces.
yeah, trading spaces. Yeah.
Yeah.
And that was the way it was. And then the order would get filled and you'd come back to you. And then you would get a confirmation sometime and they'd mail you a confirmation. Maybe your broker would call you and say, thank you. That was $800 for commission. Thank you very much. Okay.
Yeah, right.
And so, yeah, those guys did have a tendency in the olden days, as it got hot in New York City, to take more vacations and go, to the coast and the shore, or whatever they call it. Now now you look at, CNBC and they go down there and somebody's at post 9 or whatever. There's no one there, but that one old guy with the crazy hair,
Yeah.
he's like the only one there. Everything's
Yeah.
electronic now. So you're exactly right. Uh, the algorithms and computers, they don't care what season it is. They're just looking and searching. And that's a majority of our trades and the majority of our markets are exactly that. So I agree with you. I think those days are done, you know.
Yeah. I think the one thing I've been thinking a lot about because Kerry's so fundamentally based is that how these algorithmic portfolios are structured and how the algorithms are written. And it's really a lot of it is so much based on things that weren't in it 25, 30 years ago. It's now more about volatility and volume and um, headlines. And, I mean, the technology has gotten so good that if, you know, Jensen Yang sneezes, it picks it up and it maneuvers around a trade like that. And I guess that's a concern I have is that it almost it takes away the fundamental structure of a company and basically it just plays off it. It's not consistent. And I think that as an investor, it really changes the dynamic of how all this works. It's a little scary.
Well, I think on top of that, you hit on it just a little bit. The news cycle is every second now. What used to be you'd have to wait to Walter Cronkite to come on the evening news to tell you what happened, and or you'd get the newspaper and you look through and they'd had 2 pages of all the ticker symbols.
Yeah,
And that's how you got your.
yeah,
Now you just go to the computer, you look at it, and it's real time. You can trade real time. Okay, and the news is right there. Not to mention, look at all the different investment products that are available to us now, not just stocks. Okay, we got ETFs, we got mutual funds, we've got bonds we can get into, we've got these derivative products and these call and put option strategies that we can go buy daily in and out. I mean, it's
Yeah.
amazing. And on top of that, look at how many people have 401ks and that money just continually cycling in. It's a different way than it was certainly 40 or 20 years ago, 10 years ago, you know. You're
Yeah.
right.
Oh yeah.
You're right. And just
Yeah.
think if
I
we go
think it's
24/7 on these markets,
oh
which I think they
I
will at some
it's
point.
almost so I live in an area where I moved 15 years ago. It was just after the oil spill. Everybody thought it was the beaches were black with a tar oil. Home prices were dirt cheap, relatively speaking, and you had seasons. You had winter season was dead. You know, you had summer, spring break, and then summer, and you had seasons. You had breaks in between. Today it's 24/7. It's year round. People are moving there. The seasons, the shoulder seasons are no longer shoulder seasons. It's just 24/7 people and traffic and all this. And it reminds me of where we're at in the stock market and where how investing, it's like, how do you manage a lifestyle? I think about this a lot. How do I manage a lifestyle to keep a good balance so I can keep my sanity? And I think it's the same way with investing today. It's become, you know, it is no longer seasonal. It no longer slows down. And I think as investors, we have to really adjust to that. And I think that's, right upon risk management, because there is no seasonality, there is more opportunity for market, meltdowns or melt ups. And it's become, instead of I'm a long-term investor, being I'm out 10 years, 20 years, 30 years, I'm now a long-term is 6 months, 12 months.
Yeah, and you hit it right on the head. And for me, it depends on where you are on the investment world cycle. Okay, if I'm just starting out new, okay, uh, I'm trying to build up my wealth. Okay, so you're going into growth and you're going into more risky type things. Where I'm at personally, I've already made majority of what I have, and I don't want to lose it. Okay, so I'm more in a risk off manner. Now I do teach swing trading, I do teach technicals, and I do use them, but I don't find myself swing trading every single day. I do not do that. Okay, I have to find something that I really like that intrigues me because I am so attached to my money. I don't want to lose it. Okay, and that's why my risk management is really strict, and you'll see that in the way I talk about trades and talk about getting in, and people will say, you're pretty negative on a lot of stuff. I'm not negative. I'm just very risk averse, and I don't want to lose it because once you build up wealth and you have a certain sum of it, that money, it's easier to make more money off that. But it's easier to lose that too. And you don't want to do it, especially later on in your life. And so that's why I have, like you said, I've got core positions that I've had a long time. And I do watch that 200-day moving average on those. And I do like to get into the indices. My favorite one, I don't do the SPY or the Qs or anything. It's ITOT. It has 2,500 stocks in it. It's been my favorite forever. And I do use a strategy for myself personally. Get in when it's above the 200, get out when it goes below the 200, and it's worked well for me. And that's just how simple it is. I don't try to overthink it. I try to preserve my money, and when I see an opportunity, get in, get out, unless it's a long term, But even on that long term, like ITOT, I don't stay in if it hits that 200 or the 50-week moving average is the other one I watch. You know,
Yeah. Yeah. I think about that. The 200 has been a standard for so long, right? With markets changing as they are and artificial intelligence coming into the play even more so, all the way down to the home gamer. I hate using that word because I think Kramer says it. It's you can program a AI program to trade markets now. All of a sudden, it goes from the billionaire firm on Wall Street to now you and I can sit here and program AI programs. How much more volatility and price movement comes into play. And over time, does that 200 adjust to more of a 90-day or a 50-day, kind of period? Does your risk management process change? Is 200 you're in the will the 200 become the death zone, basically? And I think as
Yeah, I
as
like that.
as we evolve and technology comes more into this and we eliminate the human decision making process, that's where we got to really start to go. Be willing to adjust our process to adjust to the environment.
And
Because you
you're
think
key,
about it,
right?
we
You're
are
spot on
taking the
there.
human element out of this.
You're spot on. Have a process or a procedure, and I preach that. You preach it all the time. What is your process? What is your trading plan? What is your investment plan? And it doesn't have to be static. You can adjust your investment plan as you get older, as your financial situation changes, all that. But
Yeah,
stick to something that takes your emotions out. And I agree 100% with you on that, because emotions will kill you, and chasing
yeah,
things will kill you too in the long run.
yeah. I mean, what was it today? I was reading the range on the S&P 500 today is 3%. So
Yeah.
it's gonna move. It could move 3% up or 3% down, right? Go back 20 years, go back 10 years. What was that range? Probably 1%,
Oh, I
right?
remember you'd watch IBM if it moved. And back then we did eighths, we didn't do cents. So if it moved an eighth of a point, that was like a big day. Oh my God, IBM went up an eighth of a point. And now it's like someone sneezes, like you said, and we're up 15% or down 15%.
Oh yeah. What was it? What was I looking at? A firm was up 9% yesterday. I
There
mean,
was a lot, yeah.
yeah. Couple others were up 10%. I mean,
Well, look at
it
yeah,
just
Coinbase.
shows you,
Yeah,
huh?
yeah,
It just
Coinbase,
shows you how this has changed. And I think that's where this we don't hear the news or the media talk about risk management. And I think this
because
is
they
going to
don't
become
make
more
money
and
off
more.
risk management. They don't make money off
I
risk
know, I
management.
know.
Yeah.
True. I
But
know.
we
It's all
have
about
to,
money.
I mean, it's our money. I mean, it's all you guys is money. And like Bob said from New York, I want to make money. I don't want to lose money. And the number one rule, as Warren Buffett says, to making money is don't lose money, you know, because then
That's
you got to
right.
make it up. And if you're down
Yeah.
50%, you got to go up 100% just to get even. And we've all been there. We've all been there where we've got into a trade or an investment. I really like this. It goes down 5%. Well, I'll wait till it comes back. I'll get out. Then it goes down another 5%. And then before you know it, you're down 25%. You say, well, now I'm stuck. Do I sell? And what normally happens, and it's happened to me in my past, I finally get frustrated enough with it. I sell it, lose 50%, and then it starts going up. you
Yeah,
know,
right.
how many of you have been in that position? I have.
Yeah. Yeah. Um, all right. Well, we're coming to the almost hour now. Um, is there anything in the
Um, I got a question here on, well, number one, someone asked about Paul Tudor Jones and books, and I'm actually working on a kind of a white paper on the 200, and I'm going to I hopefully put it out next week. I'm not at home. I've been on vacation this week, so I haven't had time to do it. But I'll put that out next week in my office about the 200 and thoughts that what Paul Tudor Jones has thought. I also have a question. It says, Mark, you haven't sold Berkshire under 200, correct? Which is correct. Your cost basis and conviction make it a whole. Bitcoin as well, right? Correct. Any other long-term holds? Uh, I have a MicroStrategy as a long-term hold. I got into that back when they started becoming a Bitcoin treasury company. And I also got into IBIT, which is the Bitcoin ETF from BlackRock. And I got into that when it first came out because I thought instant I've done a lot of thought into Bitcoin and I really like it. And it's not for everybody. I understand it, but I've done really well. And as far as Bitcoin goes, along with Berkshire, Bitcoin goes up on average for the last 16 years, 49, 50% in value. And Berkshire Hathaway has gone up since its starting in 1963, I believe, an average of 19% a year. And that beats the 13% monetary inflation. I like that thought. So those I'm in. Uh, and I have treasury bills for my cash, well, short term. Okay. Um, and then I do ITOT when it does the 200. I like that. And then on the side, I'll do these swing trades once in a while. So, Trent, they want to know about you too. Share any long-term holds or convictions?
So I look at markets from a standpoint of money flow. Where is the money going? So the 12 part which you get into your newsletter every morning, uh, I that's money flow to me. That's where money is in the way I manage that. And then on a satellite approach, I'm incorporating the tell sheet 12 because I like Kerry's ideas on fundamentals, I artificial intelligence, and I like the volatility of that. And so just that combination, I've realized about myself is I'm not a great swing trader. I don't have the attention span for it. I like the more intermediate to long term, and it's where I put my house. You'll see what I like by what I create, and that is the 12 and the tell sheet 12 as well. That's it. That's where I'm at. Everything else, you know, it just doesn't fit my wheelhouse. And I can walk away from that. My model keeps me safe. So that's how I'm approaching it.
And I think that's cool because you just had two opinions from two different people, two different lives with two different financial situations and thoughts and families. And you guys are all the same. You guys are all individuals and you need to think of what do I need? And Margaret and I had a conversation once on the Discord, and she was talking about her long-term investments, and I just kind of put together an outline of here's how I would think it out, just for me. Not that she had to do it, but just to kind of get your mind straight between an investment and a trade. Um, and hopefully that helped you out, Margaret, because
It did. I've got all the T-bills that I'll eventually put into the long-term stuff, but I'm doing so well on this swing thing that I'm just really rethinking it. Like
nothing wrong with that.
this month, I've got like 25,000 that I swing trade, and I've done it over and over. So I've totally put in 65,000 in swing trades. And if you just use the 25 as the base, I've made 7% this month.
That's
So I'm
not
just
bad.
That's totally
not,
awesome.
I don't know.
Well,
I
what's
mean,
cool
but
about it is the risk. What is your risk ratio? How much risk did you take? And by having your process, you took this much risk for this much upside.
Yeah, and
Asymmetrical
I
trades.
put those OCOs immediately and then adjust them. And if the stock pops up, I just sell it. I don't wait for it to figure out what it's going to do.
no
And then I
emotion.
go
See,
buy it again.
you took your emotion out of it, and you're stressed less stressed, and you can ride your horses more.
Oh,
I know
yeah.
you. I don't know how long you've been with us, Margaret. It's been quite a while. Uh,
Yeah.
and I think when Margaret first came on, all I saw was the name Margaret. She never really said much, and then she started talking and getting into it. And I think you've done so well, Margaret. I'm really happy for you and what you've done because I know some of your personal story and how your financial advisor didn't do very well for you, and you decided to take it in your own hands and you found us, and we're not perfect by any means, Trent and I, but we certainly
Oh
do not
my
want
God.
people to lose money. And we certainly have a great uh, uh, membership here that has a lot of value, and they really do help me think about things. But think about it to your life and how it applies to you,
Yeah.
Margaret,
Yeah.
what your goals
Yeah.
and aspirations are. And I'm so happy for you and everyone else that's here and are making money or just learning, and don't jump into it. You can paper trade, ask questions. This forum right here is awesome for asking questions, and we'll do
I
the
will.
best we can to provide an answer. And people will pop in and say, "Well, I've done this and I've done that," and I really it makes it worth it for me to get up early every day and come and see you guys. And I know Trent feels the same way.
Love it.
It's fun. Yeah.
I
It starts
so
my
I'm
day
so
off on a
happy.
good note.
But I think for your long term, there are some things out there you just got to consider what you see that's good,
Mhm.
and
Right. Right.
use some technicals. I mean, look, we just went over a bunch of charts where things went over the 200, and look how well they're doing. Just
Mhm.
and if you get up and it comes back down, you're out.
Right.
So that's a
Right.
longer term investment, and you don't have to look at it every day.
Yeah.
Yeah. So I'm
All
really
right,
happy
Mark.
for you. I hope more happens.
Well, let's wrap it up there. Kerry's call is today at 3 p.m. Central. One note, I have been getting messages about people getting messages about Kerry's asking for friend requests and talking about some sort of trading model or anything. Kerry doesn't do that. That is a robot or a scam. So be very careful with that. Um, he just doesn't do that kind of thing. So be careful. There is somebody out in the mist who's trying to scam people. So be very careful.
Yeah, he's
We had
getting
one.
more often trend, like, yeah, even though you say you are not Kerry, don't bug, and he keep bugging, and he's keep like, yeah, messaging like
Yeah,
individual saying, yeah, he's Kerry. Yeah,
yeah, it's not him. Kerry doesn't do.
yeah.
If yeah, he just doesn't.
Gotta go to work.
Yeah, we have one.
All right.
We had one more chart right here. Someone wanted really quick. Tyson Foods, and Tyson had earnings and dropped, and we've just been kind of in this consolidation sideways. We're sitting right, on the support level. Like we saw United Health, like we're seeing Pepsi, like we're seeing Lulu, converging Bollinger Bands. You got resistance right above. When you look at this chart, you say, okay, how much do I have to the upside, and do I have any momentum to get to that level? What's my level of risk? What are the oscillators doing? They're not showing me anything right now. So I would just hold on Tyson and just take a look on the out and just wait, put it on a list if you really like Tyson. Okay, we got that in.
All right. Y'all
There
have
we
a great
go.
weekend. If we don't see
Yep.
you today at 3 Central Time with Kerry, and we'll be back on Monday with the Morning Edge.
Yep. I won't be there at
Have,
3. I'm on vacation. So we'll see
Have
you
a good
guys
weekend,
Monday.
everyone.
Yep. Bye.
Thanks, guys.
Good.
Thank you.
Take care.
Peace.
Peace. Live loud.